Hello guys, welcome to the Wednesday forecast. So let's take a look at the market. Here we have the euro and US dollar as usual, first one on the list. So let's see what it has been doing, and I have to say this has been very range bound and giving me not any sort of good price action. As you can see, we are just breaking the highs. So we broke the low, retraced here, broke the high, retraced, broke the high, retraced, left a huge wick, broke the high again, retraced, left a huge wick, and now we are getting this momentum down. So we are sort of forming a V reversal. As you can see, we have this V. If we get a range, if we push down, I will look to sell, of course, always forecasting that pattern. It is a high probability pattern, but in the last couple of months it has not been occurring. So if it does happen, I will be alert and I will be taking this short. But what I'm expecting more range bound price action. As you can see, we are stuck in this range, and what I can expect is just to get more of this. Let me sketch it out. So something like this. What I would look for is I would look for those liquidity zones down and up, above and below the range. So the thinking behind this is on the lower time frames, let's say on the 5-minute or the 15-minute, the traders are selling right here. They keep their stops above. They're buying below the range. They're buying right here. They keep their stops below the range. And those are the liquidity areas that the market makers, so the people that actually move the market, are hunting, and they're looking for those stops to stop people out, to grab the liquidity and then move the price action either in the opposite direction or whichever direction they want. So what is the best approach when dealing with a range is to look for a descending structure into a range and then look for the market to reverse. The market makers really like this sort of a setup because they grab the liquidity right here and then they reverse the price to the upside. Same thing right here, look for an ascending and then a reversal, something like that. So for the rest of the setups, I would just be really patient. The only thing I would take is I would take a nice impulse to the upside. I want to see it break out of the range, definitely move away from this range bound structure, or a nice impulse to the downside, something like this, and then get a nice opportunity to enter. So I just want to see it move away from this current price action, because if it's just stuck in this range, it's not showing me any good opportunities. So now let's move on to the euro and the Japanese yen. As we can see, this one is also just not really showing me anything. We do have sort of an ascending right here, but then it just turned out to be a larger range above, because so we broke the low, retraced, broke the high, retraced, left a huge wick up, huge wick down, broke the high, retraced, left a huge wick. When you see huge wicks like this and just no moves but just range bound price action, that's a very bad sign. That is a sign you want to be patient, and that is a sign you want to be a bit more careful when looking for setups. And now we are getting some momentum down. So at this point, if we do get a nice impulse down, I will look for a clean flag, of course, or I will look for maybe the price starts to descend, meaning the move is about to end. Look for a reversal to the upside like this, or look for a V reversal like this, range, push up, look for a trade to buy to the long side, and if we do ascend, then do look for a reversal to the downside like this. Another possibility is we can get a huge impulse up and then do look for a flag, but that is not really a high probability. That is not really so high probability to happen. That I think will not occur, but still forecasting it, we need to forecast every single possible move. And yeah, so currently this is not looking that good. I don't like this part at all. This looks really bad. This impulse now looks okay, but I want to see more momentum down. I want to see it push down a bit more. So my advice, be more patient, look for a larger impulse, and just sit on your hands a bit more. Now for the Aussie pairs. So here we have the Aussie and the US dollar. And there was a trade right here, opportunity for a trade. So what we were seeing in the prior price action, we had a really nice trend before. As you can see, we got a nice push, pullback, another nice push, pullback, push, pullback. Then we got this range bound price action, but then we continued with momentum, retraced, continued a bit more, retraced, and then broke the low. And I just want to go over this price action. Maybe some people did take this short, but for me personally, this was not enough of a break. I wanted to see a bigger break at this point. A bigger close, a bigger break, a bigger candle. This was not enough. And especially this part was a bit of a concern. As you can see here, price started to slow down a bit. We got this momentum shift. We got these bullish candles too, right? So we got wicks to a downside, which was also a warning sign that the momentum to the downside might not continue. So this break was definitely not enough just by itself. And then when you take prior price action into account, it's just a bad setup. And then the price actually did reverse. We created a large wick, price reversed. This impulse was looking good to me, but there were also some warning signs. First, we had large momentum down, as I just said here. We had 3 large legs down, first one, second one, third one. Then we had another large leg down right here. And usually when I see that sort of price action, I want to see a nice clean descending after it. So I want to see more of a descending, or really nice clean descending. And we just got one break and retrace, just one, and this little bit of weakness in the impulse. So this was not enough of a descending for me personally. I wanted to see a cleaner descending, and then we got this reversal, which looked good. There was momentum. There was definitely momentum behind it. It was a nice push, don't get me wrong, but we did create double wicks at the top. So that was also a warning sign for me. And what I wanted to see at least maybe a combo to the entry point, or even sort of a range where the price is just struggling to go down. Then I would consider it. But what happened, we got this sort of a V. Actually, we got a sort of a V reversal after the double wicks. So I did stay out of this trade. If anyone did take it, they would now be in some nice profit. So to sum up why I stayed out, the prior price action, I saw that the momentum was still largely to the downside. The descending was not convincing enough, and then we got these double wicks. So when you combine the 3 factors, I stayed out of this trade. And this one turned out to be good, so the price went up, but maybe in most cases it would actually have stopped you out. So you never know. It all depends on your backtesting. According to my best backtesting, I'm not taking this sort of a setup. And then we impulsed up, got a big wick, and retraced. So at this point, I'm seeing a momentum shift with this candle. So I'm being a bit more patient, to be honest, with the setup. If we get more of a range right here, I would maybe consider taking a combo trade to the entry area. This would be the entry point. The most recent high is my entry level. So if we do get more of a range because of this wick and because of this momentum shift, I would look for a trade only after that range. So currently my order is not on, because this can just create a V and then continue down and stop me out. So I'm being a bit more patient. I'm looking for a range right here, but what I would really like to see is another push up and then a nice break and retest trade. That would be very high probability, especially on the Aussie and US dollar. That works out most of the time. Or a nice push and a nice small flag. I don't take larger flags. I only take these smaller flags that haven't retraced to the 50% of the impulse. So another thing to note, if we start to ascend, that means the move is done. And then I'm looking for a reversal to the downside. And if we start to descend, I would be a bit more careful with taking any setup, since that would signal to me this descending structure going into an ascending and then going into a descending, which usually just tends to give us a larger range. And since I am a trend trader, not a range trader, I want to avoid ranges at all cost. If I get an indication a range will happen, I'm staying out. I'm not taking any trades. Another thing that can happen, we can get a V. I think I already forecasted that, not sure. We can get a range, push down, and then get a nice opportunity to go short. Be on the lookout for that. But yeah, that is about it. Also, we can just shoot down, get a large impulse. Of course, always forecasting that because it can happen. But yeah, that is it for the Aussie US dollar. So currently, I'm being a bit more patient. My order is not on, but we are trending up from a descending structure. So we've got this descending. We started a trend to the upside, so that does look good, and I am looking to buy on this uptrend. Now for the Aussie and the Japanese yen. This one looks like crap. This doesn't look good at all. So we had this sort of a descending, but it was more just crappy volatile price action, to be honest with you. And then we did break to the upside, retraced, broke again with one candle, left a wick. My order was definitely not on because this was just not convincing enough. This uptrend was not convincing enough. It was too small, so my order was not on. And then the price broke the low, retraced. We created a V reversal, and I am expecting a larger range. I am expecting something like this. So do be careful about those famous liquidity areas, down and up. Do be careful about them. See how we break out of them. If we get a large impulse up, look for a trade. Be careful if we just break and retrace. If we get a large impulse down, look for a trade to go short. Also do look if we maybe start to descend, but then again, reversals don't really tend to work out on this pair, so be careful. Be careful with the reversals, but do look if we get a ascending or a descending, then a reversal. That's about it. Nothing really to say about this pair. It looks like it's stuck in this larger range, so nothing is really showing. We had this volatility also, as you can see. So just a lot of volatility, a lot of range bound price action, and I don't like this. I'm waiting for more on this pair. I'm being a bit more patient. I want to see it move away to the upside or to a downside, far away from this crappy structure. That's about it for the forecast, guys. Hope you took some value. Keep an eye out for the Aussie and US dollar, and for the rest of the pairs, be a bit more patient. I will see you guys in the next one.